stock taxes. As President Trump begins his second administration, he has promised to extend the Trump tax cuts before they sunset, due to expire currently at the end of this year. He wants to roll that, the extension, and some of his other tax ideas into one big, comprehensive bill. But there's one thing that could stand in the way, and well, that's the cost. Here's Liz Pancotti with the Roosevelt Institute on CNBC.
I think we have a really fragile economy, one that looks okay on paper, but the minute you lift up the hood, it's not great. Trump has proposed $10 trillion in tax changes on the campaign trail, between making the Tax Cuts and Jobs Act permanent and, no tax on tips, no tax on Social Security, no tax on overtime. $10 trillion is not something you can recover from a debt and deficit standpoint and from an inflationary perspective.
Just a couple of minutes ago, John, we were talking how, $1 million, $5 million, maybe a significant amount for a retiree or pre-retiree out there. They're throwing out $1 trillion in Washington like it's, pennies. So it sounds like the debate on this has just begun, how to fund these tax extensions. In the meantime, what can we do to take advantage of the low rates as they are right now to avoid paying higher rates down the road?
Yeah, look, we're expecting the Trump tax cuts to be extended, permanent. I don't know if that can really happen. But if they try, they try. But look, we're going to take advantage. And look, realistically, Chris, no matter what administration comes in and how do they change the tax code, what we have to do is look at all the workarounds and all the opportunities that we can create a low tax environment or a no tax environment. So with the expectation of this year, they're going to be changing the depreciation opportunity to bonus depreciation to be 100%. Instead of what it's scheduled at right now, or what it was last year and what it was supposed to be scheduled. We're expecting that to change. So that creates a lot of opportunity, especially for business owners. But even using Section 179 depreciation, we take advantage of that too. So what we're going to do is use the tax code everywhere possible where we can help the consumer, help individuals that we serve, that we help out, lower their tax liability. Like we're doing something right now where we can convert up to $623,000 from someone's IRA to their Roth without paying taxes. And the thing is, most people are aware of, and look, we've done lots of millions of dollars of Roth conversions with paying taxes, up to a limited amount. And then we have found some advancements and some opportunities within the tax code that we can use, not just for business owners, but that we can use for W-2 employees and even retirees, where we can create an LLC and use that as an option using leverage. And there's some participation rules with it, but we can use that opportunity to where we can convert, like I said, up to $623,000 a year from an IRA to a Roth without paying taxes. And so, we have people that come to us that have, 2 and 3 and 4 or 5 or $10 million in an IRA, or, combined type of accounts that have tax treatment like an IRA, and where we're shifting these assets from that account to a Roth or Roth alternative without paying taxes, using this part of the tax code. And so this is something that we use as a tool, and it's even a profit center, as the LLC structure is, for that individual. So they're getting roughly about a 12% cash on cash return for the year on that. That could be taxed too, but we use some tax strategies to offset that income as well. But the thing is, it's, look at it this way, Chris. If you have an account that you've never paid taxes on, but you're going to be forced to take the RMD out later, what if we can shift these assets out without you having to pay taxes on it and get it out the tax code completely? So we could set it up to where it's in a Roth, or we do a Roth alternative, and that money will never be taxed again. And so that's the key thing, is that we got to look at, what's the big picture for you, your income needs in the next, in the next 12 months or the next 5 years, or, what's going to happen 10, 15, 20 years from now. And so we have to solve that riddle with the tools that we have available to help them lower their tax liability. When we look at the amount of debt our country has, we have to find and we have to use opportunities that are in the tax code to legally help them lower their tax liability.
There are always threats to go along with those opportunities out there. The threat, of course, is paying higher taxes down the line, but there is a good opportunity, at least until the end of this year, right now, to take advantage of these tax rates as they stand. If they make them permanent, I don't know if that is feasible. $36 trillion in national debt, and that money is eventually going to have to come from somewhere. But this is a good time right now to find a way, because here's the thing. Over the course of your retirement, 15, 20, 30 years, you're going to need money. You're going to need income. And 15, 20, 30 years from now, guess what? The government is going to need money as well. So would you rather pay taxes now or minimize the amount you're going to have to pay down the line or be subject to whatever the bill may be, when the tax rates do change? I think it's certainly worth taking a look at, figuring out the right way to go about it. And that is something that the team and Matthew James Tax and Wealth Management, it is right there in the name after all, can help you out with. You just have to take that first step and set up a time to speak with them and begin that process to be as tax efficient as possible in your retirement. 337-366-8366 or go to the website at matthewjames.com. As 2024 wrapped up, the last jobs report came in positive. More than 250,000 jobs were added, and the unemployment rate dropped from 4.2% to 4.1%. But on that news, the stock market actually went down hundreds of points. We've still seen some of that in the past week. Why? Well, it's because good news means that the Fed will likely pause interest rates again. And strategist Ken Polcari tells Fox Business this might kind of be the status quo for 2025.
I don't think we're going to have a rate cut all year, quite honestly. And I've been saying it for a while. I think the data's been telling us that the Fed has been wrong. The bond market's been telling us that the Fed has been wrong. The labor market was not slowing the way that Jay Powell told us it was in September when he had to make that very bold 50 basis point rate cut. Made no sense. And now it makes even less sense.
So if interest rates do stay where they are, if they continue to hover around this mark, does that open up new opportunities, or should people be seeking, greener pastures?
Well, I mean, look, we have to look at what do they need? What are they looking for? What are they trying to solve? And then we have to look at all the financial instruments that are available. And the other thing, too, is we have to look at it in different categories. People that are worth less than $1 million have exposure to certain things. People that have a investable net worth of $1 million or more have exposure to different things. And then people that have an investable net worth of $5 million or more, they have exposure to some very lucrative options. So then we have to look at, number one, which one of the three tiers that they're in. So then from there, we have to look at, okay, what do they need and which financial instrument could we use to help them out in this particular interest rate environment, and looking at the risk of the market. So these are the things that we have to look at and calculate and figure out, okay, how much income do you need? Where are we going to get that money from? And then how can we make it tax efficient? What things that we can use in the tax code to help you out? So we just have to look at what's the current rate of the market, and then what tools, what instruments can we use to help them find their goal. So, I mean, some people try to, we hear about people all the time pitching guaranteed income annuities. Like, I'm against that. I mean, I've been talking negatively about those financial instruments for probably 5-6 years on the radio now.
Yeah.
I mean, I've never, tried to talk you into that type of thing. Especially on the air, but even in person, because the math, I just don't like it. Mm-hmm. And so there's some issues, whenever you have a guarantee on one end, what's the guarantee on the other side? So we just have to look at, with the current interest rate environment, there's some lucrative opportunities that are available for, all categories. If you have a investable net worth of $500,000 or $200,000, or if it's over $5 million, we have to look at all the opportunities that are available for those individuals with the current market that we're in right now.
Being able to find out, ways to make it work in your favor. As I mentioned previously, threats and opportunities out there. If interest rates do go down, perhaps using things like CDs or things that are tied to interest rate, not necessarily great. The opportunities, of course, are there if you're seeking to, borrow money. Obviously, in going into retirement, you want to be as debt-free as possible. But again, it is kind of that seesaw when one thing goes down, the other one goes up. But being able to figure out how it can work for you, and as importantly, how to figure out a lack of planning, how it can work against you, and how to navigate around that. That is what John and the team can help you with as part of your overall plan. Remember, your retirement plan is not a set it and forget it approach. You want something that can change as the circumstances around it changes, and that is what you get with John and the plan that he develops.